Welcome to this Tax Justice Network podcast, looking at some of the findings of the 2020 Financial Secrecy Index and its relevance for Asia. I'm Naomi Fowler from the Tax Justice Network's monthly podcast, the Taxcast, and I'm speaking to the Tax Justice Network's Moran Harari. Let's start with Hong Kong. It's improved its secrecy score because it's finally accepted participating in automatic information exchange, but it is still a huge offender, remaining at number 4 in the index. What's changed since 2018?
Hong Kong is considered to be a major player on our Financial Secrecy Index. It is ranked number 4 also in 2018 and has remained one for 2020. It has a secrecy score of 66 and its share of financial services for non-residents accounts for 4.4%, which is considered high. What has changed since 2018? There are some issues that increased Hong Kong's secrecy score, but more issues that actually decreased its secrecy score. So Hong Kong ended up slightly improving its secrecy score in 5 marks, and its total share of financial secrecy reduced from 3.9% to 3%. So I'll start with the reasons why Hong Kong reduced its secrecy score and improved. Hong Kong has finally joined the Common Reporting Standard, which is the multilateral OECD platform for automatic exchange of banking information. And it activated relationships with 69 other countries for exchanging this information.
And bearer shares is another big change in Hong Kong, right? Bearer shares are anonymously owned shares or bonds in a company, basically on a piece of paper, a certificate that doesn't have the name of the person on them and is only paid out on when the certificate is presented. There's no record kept of who owns the bearer instrument in any transfer of ownership. It's a big and obvious money laundering and tax evasion risk that many countries are now taking action on by either having them registered or immobilising them.
Bearer shares are no longer available in Hong Kong. So in 2014, it was no longer possible to issue bearer shares because the law prohibited. But this law didn't make it compulsory to register pre-existing ones. There was a grandfathering provision that allowed that. However, the recent report, the 2019 Global Forum peer review report, clarified that Hong Kong has recently went through all the records and confirmed that it has no record of a public company that issued bearer shares, so no one actually could have benefited from the grandfathering provision. So as a result of the conclusion that there are no bearer shares available anymore, we now consider that legal owners of companies are registered and updated, and they are also available online against a cost of up to $10. And finally, we now have indication that Hong Kong also publishes online some of its unilateral advanced tax rulings. On the other hand, Hong Kong slightly increased its scorings. This happened in 2 indicators. So the first one, with regard to local filing of country-by-country reporting. Following a recent OECD peer review critique of the country-by-country reports, Hong Kong legislation was changed since 2018, and it no longer goes beyond the OECD requirements. So that means that if there is no international agreements in place as required by the OECD, local filing of domestic subsidiaries cannot be applied, which is unfortunate. In addition, as part of its amended Securities and Future Ordinance, Hong Kong now enables the incorporation of companies with limited liability sales, basically protected sale companies, which is a form of anonymous company. So its score has increased because of that.
And Japan's another one to watch because it's moved up several places from number 13 last time to number 7 this time. Why is that?
Japan has slightly increased its secrecy score in 2 marks. from 60.5 to 62.9 out of 100, and its share of global financial services provided to non-services accounts for 2.2%. Now, the slight increase is because of two issues. The first is that although bearer shares were already prohibited, we now found indications that actually Japan did not take any measures to ensure that pre-existing bearer shares, meaning before the law has taken place, would be registered or at least immobilized. The second reason is that with regard to court secrecy of tax proceeding, we have slightly tightened our methodology, and given we don't exactly know what are the limitations to public access regarding private and confidential information, we can no longer consider that actually all court proceedings on civil and or criminal tax matters are openly accessible to the public. But I think the main reason for this change in the ranking is that if we compare it to other countries, so on average, countries on our Financial Secrecy Index decreased their secrecy scores by 3 marks out of 100. And that also impacts the change of ranking of countries that actually worsened their secrecy and not improved it.
Okay. It's interesting to see that Taiwan has shown strong leadership in the region, improving their secrecy score by 10 points, which is impressive. In part because of China, they're not able to sign up to any international treaties. So instead, they've been working really closely with the Tax Justice Network by implementing our recommendations. They've been really proactive.
We have been assessing Taiwan also in 2018, but due to the foreign political opposition that prevent Taiwan from joining international agreements and being assessed or peer-reviewed by the Global Forum, it was really difficult to assess its legal framework according to our 20 indicators because we simply didn't find the information. And usually when we have an answer that is unknown, we assess it as secrecy. And this is because the absence of data after investigation is interpreted as evidence of opacity and results in a higher secrecy score. And despite, finding the information in international reports, another way to provide us the information is by answering the survey we circulate to the Ministry of Finance of all the countries we assess. And this time we also sent the Ministry of Finance the preliminary assessment after we assessed the country and gave them another opportunity to comment on our assessment. So Taiwan has engaged with us even before the survey and after. And we've got lots of answers from several departments in the Ministry of Finance, in the Ministry of Economic Affairs, the Central Bank. And they provide information and also liaise with us for any clarification we needed. So we now know more answers, and the improvement is mainly reflected in our ABC, as we call it. So A stands for the Automatic Information Exchange. Even though Taiwan has not signed the Multilateral Tax Convention for exchanging information automatically, we do consider that it has done so, although only as of 2020, which is considered to be a very partial scoring. This is because it has expressed its interest in joining this convention, but could not done so due to the foreign political opposition preventing it. And it also managed to sign some bilateral agreements. With regard to B, beneficial ownership registration, we now know that Taiwan requires legal and beneficial owners to be reported in the ownership in free ports, in all cases to a domestic government agency like customs office and commercial registry, etc. And finally, with regard to C, country-by-country reporting, we know that Taiwan has a one-off disclosure of new listed extractive companies, and this is considered to be publicly country-by-country reporting. And the other feature of country-by-country reporting is about local filing of it. So as opposed to 2018, Taiwan goes beyond the OECD model legislation and it allows access to local filing for any domestic subsidiary, and this even in cases where a country doesn't have the international agreement required by the OECD for exchanging information automatically.
Let's talk about China. It's been maintaining the same secrecy levels and it's increased its global scale weighting a bit, so that's the amount of business it's doing. Are there any signs, do you think, that China is wanting to tackle financial and legal secrecy?
So as far as we are aware, there are no signs of improvement on financial secrecy with regard to China, except for automatic exchange of banking account information, where China actually followed the trend and increased the number of activated relationships it has from 61 it has in 2018 to 93 it has in now. However, it appears that China is blocking Taiwan's access to international agreements. So as we know, Taiwan hasn't signed the OECD Convention on Mutual Administrative Assistance in Tax Matters, and it also could not join the Common Reporting Standard, which is the multilateral platform of the OECD for automatic information exchange. And this has caused big secrecy risks. Taiwan has managed to sign some bilateral agreements, but if China is preventing the access to the Common Reporting Standard, it will be, I would say, much harder for other countries, especially Asian countries, also to exchange information with Taiwan. Now, in terms of beneficial ownership registration, China still has unregistered bearer shares, and it still doesn't require beneficial owners to be registered. And this is unlike the global trend towards beneficial ownership registration, even among Asian countries like India and Indonesia, who are already past the legislation in this regard. Finally, with regard to country-by-country reporting, China neither publishes country-by-country reporting nor requires robust local filing from domestic subsidiaries, regardless of international agreement in place like it is required by the OECD.
And there's a good news story for the region. Two countries, India and Vietnam, have implemented what we call robust local filing of country-by-country reports for companies. Why is this important? I mean, generally country-by-country reporting is weak in the whole region. So why is this important about robust local filing?
So one of the great tools to tackle tax avoidance and tax evasion is country-by-country reporting. These kind of reports contain information on where corporations operate, like how many employees they have, how much taxes do they pay, how much assets they own. And these details provide really a valuable information to identify whether any tax shenanigans take place. So, for example, if a company has a lot of income but no employees in one country, whereas in another country it has many employees and many assets but no income and it doesn't pay tax, that should alert for a potential case of tax abuse. Now, following the initiatives of the OECD and the European Union, many countries today oblige multinationals with an income above a certain threshold to submit these kind of reports to authorities. Nonetheless, most of these country-by-country reportings are not open to the public. So we at the Tax Justice Network, which by the way already proposed to oblige companies to submit these kind of reports already 10 years ago, we take the view that these reports should be open to the public because they don't contain confidential information. And as an evidence for that, already banking and extractive sectors in Europe are obliged to publish this information for several years now. And some companies from other sectors have started voluntarily to publish these kind of reports. Unfortunately, the OECD imposes some cumbersome process to obtain these reports automatically via the multilateral platform. As a result of that, it is not really guaranteed that some countries will be able to receive these important reports, especially countries that don't have enough international treaties in place to exchange information with other countries. However, some countries are willing to go beyond the OECD requirements and are requiring what we call robust local filing. So what does it mean? These countries will either get these reports of the multinationals that operate in their country via the automatic information exchange platform from other countries, or if there is, for some reason, they can't do that, they will simply ask these reports directly from the local subsidiaries of that multinationals that operate in their countries. The OECD, however, restricts this second option I just mentioned and only allows to receive these kind of reports in very specific circumstances. The OECD also limits the use of this information that is included in this report, so it cannot be used, for instance, to fight money laundering. Now, at the moment, out of the Asian countries we assess in the Financial Secrecy Index, India, Taiwan, and Vietnam are the only ones we consider to have robust local filing. So these countries, in practice, ensure that if they can get the reports from some reason via the multilateral automatic information exchange platform, they will get it directly from the local subsidiaries. And that way, they can ensure that they have access to this very useful tool and to better tackle tax abuse by multinational.
What should happen now in Asia in terms of priority to address these secrecy levels in the region?
I think it's best to address this question by reflecting on our ABC. So A stands for Automatic Information Exchange. Out of the Asian countries which are not yet participating in the Common Reporting Standard, which is the OECD platform for automatic information exchange, only the Philippines is part of the pilot project to get assistance towards joining such a platform. And we recommend all countries in Asia to join the Common Reporting Standard, or at least ask to join this pilot project, and ideally to use the information to tackle corruption and anti-money laundering and avoid choosing voluntary secrecy, which allow them only to send information but not to receive information from other countries. With regard to beneficial ownership registration, only India and Philippines have complete beneficial ownership registration, but none of them actually publish any information online. So we recommend that all Asian countries to follow the global trend towards beneficial ownership registration, and especially making such valuable information publicly available. And lastly, on country-by-country reporting, at the moment only Taiwan and Hong Kong publish partial country-by-country reporting information. It's a one-off disclosure requirement for companies, for listed companies. There are only 3 jurisdictions, India, Vietnam, and Taiwan, that apply robust local country-by-country reporting filing. And this is to ensure the access to the reports even in the absence of international agreement required by the OECD. So we recommend that all countries in Asia to publish country-by-country reporting, and at least to follow this Asian country that already do so with regard to robust local filing.
Thanks for listening. You can read more on the methodology and results, along with plenty of other data, on www.financialsecrecyindex.com.